Marcel Williams here with Elliott Wave Source, #1 source for Elliott Wave technical analysis. Today is Monday, August 12th, 2013, and today I will go over the gold and dollar index, gold futures, just to give a outlook as to where prices are going to be heading this week, and then I'll touch on the Aussie dollar, just setting up to be quite attractive at this time. Now, starting out with gold futures, see that prices have been pushing higher for some time now, for pretty much a decade right now. And then we started to get that correction going down. So actually, we completed 4 waves and now working on the 5th. So prices are heading higher from this point. We had wave 1, which was followed by a 38.2% correction for wave 2. Then wave 3 was actually extended 161.8% off wave 1, and then wave 4 retraced 61.8%. So we saw it bounce off that level, and then now we're working on wave 5. So it appears as if we're getting the first wave in wave 5. Well, the first wave, first subwave within that first wave of wave 5, rather. So now as we jump down on the hourly charts, just pull up the charts for gold futures, and then we'll just take a closer look at that first wave. So now we had that wave 1 up. We actually called out the reversal at this point. We were looking to get along this wave. We saw the increase in the volume at this bar. So at that point we were expecting a correction, and then we called out a long in gold. At this point, right here, it was a 61.8% correction at this level. So we then entered along at that level, and then we took advantage of it going higher. And then now we were anticipating a move towards the 61.8% fib, which is represented by this red Fibonacci retracement level right here. We were expecting prices to push lower there and then take off. So we were looking to enter more at this level, but prices actually flirted with a 50% fib, and then it started to push higher. So we can expect that wave 2 has ended right here, and then we're going to see prices take off from this point. So now as we take a look, we see that this is setting up to be the first subwave of that larger wave 3. So this is that 1, 2, 3, 4, 5 to give us wave 1. And then we're expecting a move down towards the 50 or even the 61.8% Fibonacci level, which would also coincide with a bounce off this ascending trend line, and also a bounce off that descending trend line it recently broke. So we could see anywhere between the 38 to the 61. So you could definitely look to just keep entering positions as they hit the fib levels and look for this pair to go higher. But we're definitely anticipating this commodity will push higher from this point. So switch gears over to the dollar index, and the dollar index is not as clear as gold futures is. So we see we had waves 1 through 5 completed, and then now we're working on that corrective phase, which is a triangle formation at this time. So prices have been trading sideways for a little over 5 years now. So that wave 1, 2, 3, 4, 5. Then take a closer look. We just see it's just up, down within that triangle. If we jump down on the hourly charts, it does not come out any clearer down here as well. We initially anticipated a bounce from this level, which would coincide with a 76.4% correction at the time of this move up, and we were expecting prices to push higher from that point, but as we see, price broke down and actually continued to move lower. So with this pair, it's just bouncing all over the place, but with what we're seeing in gold, we would definitely expect this pair to push lower, as the dollar and gold have an inverse relationship. So we're definitely expecting the dollar index to continue to push lower, and definitely also anticipating that risky assets will push higher this week. Now with that said, Jump over to the Aussie dollar. Currently on the 15-minute charts. We have been anticipating a reversal for some time now, but it appears as if we are undergoing it right now. So we had this current move going up. We have it pegged as waves 1 through 3. So we had wave 1, which was followed by 61.8% correction and a bounce off this trend line. And then wave 3 is actually moved slightly past 161% extension. Move slightly past that. So with wave 4, we're expecting, as this wave 1 did, between 50 and 61.8%. So with wave 4, we're expecting a 38 or a 50% corrective move. So we can look to get long this pair at 0.907, but I would not rule out if prices push lower. So you can also look to enter at 0.905. So 0.907 and 905, and look for this pair to push higher. With this being the extended wave, we're expecting prices to push to do the distance of wave 1. We're expecting wave 5 to do that. So wave 1 moved about 150 pips. So from that level, from 905, we're expecting prices to go towards 92, or even set new highs. So 92.2, but a good target for this price would be at 92. So look to go long at 0.907 and 0.905, so half and half, and then look for the prices to push towards 0.921 with your stops below that 0.90 level. Now that's the video for today. Thanks for watching. Any questions or comments, definitely feel free to jump in the chat room, and Paul or myself would gladly assist you with anything that may come up. So hopefully you guys have a good week trading, and good luck.